This book, The Wyckoff Methodology, is a comprehensive exploration of one of the most enduring trading methodologies in financial markets. Written by Ruben Villarmosa. This book is an essential resource for traders seeking a deeper understanding of market behavior, price action, and volume dynamics. The Wyckoff method, originally developed by Richard D. Wyckoff in the early 20th century, is built upon the principle that financial markets are driven by the actions of large institutional players, often referred to as smart money, who accumulate and distribute assets in predictable cycles. Unlike conventional trading strategies that rely heavily on indicators, the Wyckoff methodology provides a more structured approach to reading the market by focusing on supply and demand dynamics, market cycles, and price-volume relationships. At its core, the book aims to equip traders with the tools needed to recognize the four key market phases: accumulation, markup, distribution, and markdown. Villarmosa meticulously breaks down the nuances of these phases, explaining how institutions create liquidity traps to shake out retail traders before initiating large moves. The book outlines the three fundamental laws of the Wyckoff method, which serve as guiding principles for understanding price movements. The law of supply and demand states that price moves occur due to imbalances between buyers and sellers. The law of cause and effect explains how price action is a result of accumulation or distribution phases, where large market participants build or unload positions before a directional move. Lastly, the law of effort versus result teaches traders how to analyze volume and price movements together, ensuring that price action is backed by genuine buying or selling pressure. Villarmosa presents detailed schematics for both accumulation and distribution phases, highlighting the key events that define these market conditions. During accumulation, institutions slowly build positions at low prices while using price spikes and shakeouts, springs, to force weak hands out of the market. This process is followed by a markup phase, where price trends upward, driven by strong demand. Conversely, distribution occurs when large players offload their positions to unsuspecting retail traders, leading to a markdown phase where prices decline. Understanding these schematics allows traders to position themselves alongside smart money, rather than falling victim to stop hunting and liquidity traps. One of the book's standout features is its focus on volume analysis as a means of confirming price action. Unlike traditional trading strategies that rely on indicators like moving averages or RSI, the Wyckoff method emphasizes the relationship between price and volume. A sudden price spike accompanied by a volume surge can indicate accumulation, while a high-volume sell-off near resistance may signal distribution. Villarmosa teaches traders how to recognize false breakouts, where price momentarily breaks above resistance before reversing, often a trap set by institutions to lure in retail traders before a significant downward move. This aspect of the methodology is particularly useful for traders who frequently find themselves stopped out of trades due to seemingly random price movements. Beyond chart analysis, the book also delves into practical trading applications, outlining how traders can develop Wyckoff-based trading strategies. Villarmosa provides guidance on entry points, stop-loss placement, and trade execution, ensuring that traders can apply these concepts in real-world markets. He also emphasizes the importance of risk management, as even the most well-planned trades carry an element of uncertainty. The book's practical insights make it valuable not only for beginners looking to understand market structure but also for experienced traders seeking to refine their skills. Another critical element explored in the book is the role of market manipulation by institutional players. Many retail traders struggle with sudden price reversals that trigger their stop losses, leaving them frustrated and confused. The Wyckoff method teaches traders how to anticipate these moves by identifying liquidity zones where large players are likely to act. Villarmosa explains how institutions deliberately create artificial support and resistance levels to mislead retail traders, only to break these levels later when they are ready to move the market. By understanding these tactics, traders can avoid falling into the liquidity traps that often lead to unnecessary losses. My analysis of the book. One of the most impressive aspects of the Wyckoff methodology in depth is its clarity in explaining complex market behavior. Many trading books focus on technical indicators or simplistic strategies that fail to account for the deeper forces driving price action. Vyckoff, however, presents a logical framework that enables traders to think like institutional investors, rather than blindly following indicators. His explanations of accumulation, distribution, and price-volume relationships provide traders with a solid foundation for understanding why markets move the way they do. A key strength of the book is its real-world application of the Wyckoff method. While many trading theories remain abstract, Vyckoff ensures that traders can translate knowledge into actionable strategies. His breakdown of the Wyckoff schematics is particularly useful, as it helps traders visualize market cycles and recognize entry points with higher probability. This is especially valuable in volatile markets like cryptocurrencies, forex, and stocks, where institutional manipulation is common. However, while the book is thorough in its explanations, it assumes a certain level of prior trading knowledge. Traders who are entirely new to technical analysis may find some sections challenging, as the book dives deep into price action and volume analysis without first covering basic trading concepts. That being said, for traders willing to put in the effort to study the Wyckoff method in detail, the insights provided in this book are invaluable. From a trading psychology perspective, the book offers a mindset shift that is crucial for long-term success. Instead of chasing quick profits or reacting emotionally to price movements, Wyckoff traders learn to think strategically, waiting for the market to reveal its intentions before taking a position. This disciplined approach significantly reduces FOMO-driven trades and impulsive decisions, which are among the biggest pitfalls for retail traders. One area where the book could expand is the role of modern market conditions such as high-frequency trading, HFT, algorithmic strategies, and decentralized finance, DeFi. While the Wyckoff method remains highly relevant, today's markets are more complex than in Wyckoff's era, and additional insights into adapting Wyckoff principles to modern trading environments would be beneficial. Nonetheless, the book does an excellent job of teaching traders to recognize institutional behavior, which is essential for navigating today's manipulated markets. Conclusively, the Wyckoff methodology in depth is a must-read for any serious trader looking to gain an edge in the market. It provides a structured, logical approach to trading that goes beyond conventional indicators, teaching traders how to interpret market cycles, volume, and price action with precision. Whether you are trading stocks, forex, or cryptocurrencies, the Wyckoff method offers a time-tested framework for understanding institutional moves and avoiding retail traps. For traders who often feel that the market is rigged against them, this book provides a roadmap to outsmarting smart money. By applying the principles outlined in the book, traders can align their positions with market movers instead of fighting against them. The insights on accumulation, distribution, and manipulation tactics make this book an invaluable resource for traders who are tired of getting stopped out or misled by false breakouts. Summarily, Vyckoff has done an outstanding job of making Wyckoff's complex trading methodology accessible to modern traders. By reading and applying the lessons from this book, traders can develop a more strategic, disciplined, and profitable approach to trading financial markets.